Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone, and welcome to another episode of the Smart Property Investment Podcast. Today with you, it is Maja, the editor of Smart Property Investment. It's going to be a bit of a special podcast today. So I'm actually joined by my colleagues on SBI, Fergus, Halliday, and Cameron Micallef. Welcome, guys. How are you both doing?
It's good to be here. Thanks for inviting us, Maja.
No worries. Always happy to join.
So we're actually, obviously, everyone's sort of pretty aware of the fact that New South Wales is in a lockdown and probably not sort of due to come out of lockdown anytime soon. We don't want to speculate, but it does feel like this is going to sort of last for a lot longer. So we're actually recording this via Zoom, which is also sort of a good little team catch-up for us. But so we're going to be basically discussing some of the top news articles on smart property investment and just some of the sort of latest developments in property. So, guys, we're actually going to start off with a little bit of lockdown news, the New South Wales rental moratorium. So we do know that last year, obviously, a similar thing was implemented sort of across the country just to sort of help out the renters, to small business tenants, and also just individuals across Australia, given sort of the COVID shutdown, lockdown, which has put many people out of work. But on the other hand, it hasn't really worked too well for landlords who, many of them are actually relying on income from their investment property to get through this obviously really tough period in Australia's history. So, Cameron, you're a particular expert on this very topic. Tell us a little bit more about the New South Wales moratorium and what it actually means sort of for both the tenants and the landlords. I know that a lot of sort of the organisations had a lot to say in terms of defending landlords and asking for more support.
There's actually a bit of a mixed review we got from all of this, but in a nutshell, if you're a renter and you see your income fall by 25% over the next few weeks with the whole lockdowns, you'll sit there and you're eligible to get some, you won't be allowed to be evicted. So therefore, the landlord is eligible for up to $1,500 in a rebate, or they can get it back in land taxes, depending on how they want to situate it for themselves.
So, Cam, it doesn't really sound like substantial help, does it? Like it's $1,500 over the space of, 60 days?
You're right, Maja. Over 60 days, it's not really going to go that far. If you look at the average rent in Sydney, say it's about $500. That's 3 weeks worth of rent you're going to get when you max out your $1,500. So, yeah, landlords, while they've got something this time, they're still going to be left behind.
Very, very sort of insignificant amount of money, it sounds like, doesn't it? But the government hasn't sort of said too much about this yet, but we do get the feeling that this could be extended beyond these 60 days, given that, New South Wales is in lockdown until at least the end of August. And I'm pretty sure the 60 days sort of run to mid-September. You'd sort of assume that maybe there'd be more support for tenants beyond that mid-September. What are your thoughts, Cam?
Exactly that. Like, as you just said, lockdown's now been extended to August 28, which it gives you 2 weeks really for people to come back into the workforce, get a job, have a bit of money into their bank accounts and pay their rents. So while they haven't exactly announced anything yet, and I'm not a doctor, I don't know if they're going to extend these lockdowns further, you get the feeling that the Treasurer probably will have to sit there and step in and help landlords and tenants again.
And there has been, like we've said, there's been a lot of sort of noise in the property industry with people sort of asking for more support for landlords because obviously, that money is someone's livelihood as well. That is, the money that they sort of live off. So we'll see what happens, I guess, Cam.
Completely. You're right about that too. Like landlords come out and sit there and they have this bad rap of being these really greedy people when most of them are just mum and dad investors. And you're right in terms of saying that, that they need that support just as much as the tenant does.
That's a very good point. So, and Cameron, I know that the government hasn't sort of said too much about this yet, but we do sort of have a feeling that this might get an extension as well, because this was sort of brought in mid-July, and with lockdown very likely to continue for longer, it is quite sort of possible, isn't it, that this could go on for longer as well, that these support measures could be extended?
Definitely. It's only speculation at this point, but every measure is due to end in August 14. So assuming Sydney stays in lockdown longer than that, which I'm not a health expert, but I'm predicting it probably would be, then yeah, these measures will probably extend beyond August 14.
Exactly. And other sort of big news for property investors, probably, you know, it's not COVID related, and it's probably one of the sort of biggest developments for property investors this year. But Labor has admitted defeat. So they've actually decided to change their position on negative gearing. So basically they've sort of abandoned Shorten's failed bid to scrap negative gearing. So we remember sort of the last federal election and a Labor government, they went in strong, sort of demanding for all these changes to the way that investors make their money, which a lot of investors obviously did not like very much. So Labor has now, Anthony, has decided to scrap this controversial measure. Fergus, tell us a little bit more about what actually happened. And this is sort of breaking news. It was only announced this week.
Yeah, no, it's very much, it seems like a case of Labor looking to kind of pick their battles ahead of the 2022 election. As you mentioned, the negative gearing and capital gains tax changes were very controversial and sort of widely attributed to be the reason they lost the previous election. And so there'd been a lot of speculation over the last year or two about whether or not they were going to drop those policy commitments. They weren't mentioned in the budget reply speech earlier this year, for instance. And basically the way this happened was that Albanese and the shadow cabinet found their new position, which is we're not going to pursue changes to negative gearing, capital gains tax, or the stage 3 tax cuts due to come in next year. And then they approached the Labor caucus to get that basically ratified. And the news broke that they were going to do that early Monday morning. And then by the afternoon, it had all been sort of signed and sealed, and all the press releases were sent out. But yeah.
Exactly. It was sort of expected because we, you know, given that Labor, this was one of the main reasons that was given for Labor's shock defeat at the last election. So it was sort of expected that Labor would move in this direction. But it certainly sort of was news yesterday to see Miss Albanese sort of come out and say, look, we're not going to be pursuing this ahead of the next election. And I think his actual words were that the Labor government will deliver the same legislated tax relief to more than 9 million Australians as the Morrison government. So they're basically aligning themselves with their opposition, aren't they?
Yeah, it's an interesting strategic play, I guess, if you like, because it's no longer making the negative gearing and the tax cuts a sort of wedge issue between who votes for the coalition and who votes for Labor. It's more these things they're already happening. We're going to fight a different battleground, which is presumably based on the release they sent, going to be about Morrison's handling of the pandemic, and sort of lean in and exclusively try and tell that story rather than talk about 12 plus different sort of policy measures, which was another sort of thing that's been flagged as a tactical failure in the 2019 election. Was just they had just had an overwhelming amount of policy reforms on the table. It was just a very mixed, cluttered messaging.
Yeah. Well, exciting times ahead, I guess. So election by sort of, I think the Liberal government has to call an election by May next year. So
I believe the election has to happen before May, and then there's a window. Yeah. There's a window in which it can be called. But it's not. I'm
pretty sure with sort of the COVID developments lately that, you know, an election is unlikely this year, but we can expect, and I'm not sure actually what the Constitution says, but can an election be delayed if we do have another outbreak? That would sort of be interesting to see.
I mean, realistically, it could be. It would just get very, very complicated very quickly on a constitutional level.
Yeah. That is true. Yeah. Boys, we've just got to take a very quick break and we'll be back in a second.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
And we're back. So today with me, I actually have my colleagues from Smart Property Investment, Cameron and Fergus, and we are just chatting about the top stories in Australia. Moving on from Labor and the Liberals. So basically, property prices, as we know, are soaring across the country. And NAB actually just this week released their sort of forecasts for property growth. And I think they're actually tipping 21% growth in Sydney in just this year alone. And I think Hobart is sort of above that at somewhere around 23%, which is just mental. It's hard to comprehend. But the RBA this week released a timely report looking into APRA's actions in 2014 to 2018. Basically, that was sort of the time that APRA implemented macro-prudential tools to cool the market. And basically what the RBA says is that it's giving its tick of approval that APRA did the right thing, that these measures did stem house price growth and they did cool the market and they made sure that everything was okay in terms of lending. But so talk has been that APRA could do something similar this year with some of the major banks coming out and saying that they, expected as soon as sort of in the next few months for the regulators to come out and to stem lending to investors. However, we now have a new set of lockdowns. Obviously, Victoria is coming out of lockdown, South Australia too. It's only really New South Wales that's locked down, but are lockdowns hurting property markets, do you think, Cam? And what are your sort of thoughts on this? We have seen CoreLogic put out some, their latest information on auctions, and auctions certainly seem to be down across the country, given that, many people sort of don't want to do the online thing. But what are you sort of seeing in the field?
It'll be really interesting that, to be honest with you, because currently, as you rightfully said, auction rates have fallen down by basically 72%. They were in the mid-80s in Sydney beforehand, and now they're down early 70s. Which obviously would suggest a bit of a price decrease. But if you look at what happened last time we had a lockdown, if you look what happened afterwards, like in between March and June that quarter, we had an 81% surge in auction volumes, which suggests that, maybe we're going to have a bit of a blip now over the next 5 to 10 weeks while we're in lockdown. But is that a long-term trend? Which I would probably suggest it probably won't be. We'll probably have this slowing down for now, and then spring selling season will kick in, and all of a sudden auction rates will go back through the roof.
Exactly. And if NAB's data is anything to go by, we may sort of need, APRA may need to step in, because we know that investor lending is sort of surging. Investors were keeping out of the market for much of 2020, but then now sort of returning, and they're returning strong. So basically across the nation, NAB is saying 18.5% price growth in 2021, although next year they are actually tipping only 3.6%. So I'm not sure, haven't looked into the data too much. I'm not sure if there's if that's on the back of regulatory action, or if they're just thinking that sort of the markets will cool on their own. Cam, have you had a chance to sort of...
A bit of both, actually, on that one. Wages growth will eventually kind of run out. So therefore, people are going to run out of money. It's simple as that. We get to 18% growth in Sydney, you're looking at couple of $100,000 in real terms and prices. So people just run out of borrowing capacity.
Exactly. And there's not much stock on market, is there? So that's going to be another issue, obviously.
Which I don't know. They're saying currently, yes, that's what they're currently predicting. But they're also saying that if, a lot of people sit there and see their neighbour make a lot of money, will it sit there and inspire them to come onto the market?
True. Also, if you're sort of seeing this sort of data, and if in 2022, your house is not going to sort of escalate in price that much, you might be sort of thinking, if you were waiting to sell, well, now could be sort of, not now, obviously in lockdown, but right after lockdown, that might be your shot to sell your property.
Completely. And if you look at your normal property trends are about 12 weeks from start to finish till you sell it, from when you first start marketing the property and start going through that process. So if you look at that now, probably should be starting your listing today for your spring selling season.
Yeah, true. Boys, we just have to take another quick break, and we'll be back in just a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
And we're back. So in Queensland, where things are looking, well, they have actually looked much better than across New South Wales and Victoria for the majority of this pandemic. We saw Anastasia even sort of flew to the Olympic Games and got to sit on the opening ceremony. There was some controversy about that, but we're not going to talk about that in this podcast. However, the Olympics are coming to Brisbane in 2032. And although it is, more than a decade away, and we don't know, for all we know, Australia could still be close to the international public by then, but fingers crossed. But in terms of property, so there's been a lot of chatter about what Olympics Games can do for the property market. So some are saying that this, could be the break that Brisbane has been waiting for. Others are sort of saying, look at Sydney, look at London. We didn't actually see exponential price growth because, in fact, Olympics do cost a lot of money at the same time. So, Cam, what are your sort of thoughts on the Olympics? So in another podcast I actually host, I was talking to a researcher, and she was actually telling me that what happens when, even during times of the Olympic Games, like right at the moment, that our sentiment tends to increase. So we're feeling a lot better sort of emotionally. We're a lot happier. And that's when, people are more likely to spend money, whether it's sort of investing it in assets or, equities or anything really, online shopping. So it is sort of interesting how that works. And I think that might, sort of make an argument for price growth, is that maybe sort of around the Olympics, people will be more happier and therefore more likely to spend money on property. What are your thoughts, Cam? What do you think these Olympics will mean for Brisbane?
Firstly, I love the optimism of maybe we get out of lockdowns by 2032. I certainly get the feeling right now.
I'm trying.
Hopefully get a few more jabs into arms. But anyway, in terms of the Olympics itself, like mixed reception we're getting on this one. Like people look at London, they sit there and say it only grew by 38% in 5 years, which is hardly a property market boom. But in terms of other people seem to say it's going to be a golden decade for Brisbane, because Brisbane's going to have always more money spent into it, new infrastructure, new jobs. Its employment, it's going to increase. It's going to have a higher level of migration internally towards it. And therefore, it's going to create a whole bit of a buzz for the city. So it can really go either way.
Yeah, exactly. And I think the sort of upside for Brisbane is that it certainly will create more jobs with the infrastructure works. And I know that, we all know that Brisbane has been sort of struggling on the jobs front in sort of providing its sort of the population enough jobs. And by 2032, we might actually get some migrants coming back into Australia. So we'll see what happens. What are your thoughts, Fergus? How do you sort of see the Olympics? And are you following the Olympics? I think swimming's on at the moment.
I'm aware of the Olympics. I'm not necessarily close to following it. I think it's definitely very interesting in terms. The thing that I keep hearing is that a lot of the infrastructure spend that's needed for the Olympics is already there from the Commonwealth Games. So a lot of the story here is potentially that Brisbane could benefit from the economic impacts of the Games while sort of having that infrastructure in place at a subsidy versus having to build it all from scratch. But also it is like 12 years away, so a lot can happen between now and then, as the last 2 years have sort of shown.
Yeah, a lot.
Yeah, Fergus is right on that one. He's like, it's only meant to cost about $10 billion, which for an Olympics is pretty cheap. But
yeah, they're going to be actually cheap.
It's already down the road in the Gold Coast. Yeah, I think Tokyo costs something like 4 times the price, I was saying. So for $10 billion in terms of stadium upgrades and whatnot is not too bad. And that's, as Fergus rightly said, it's because it's all an hour away in the Gold Coast. Yeah,
exactly. So while KPMG has already put out a preliminary report estimating that the Olympics could actually bring in 17.6.1 billion potential quantified benefits Australia-wide. And then there is that sort of argument as well, because it isn't actually going to cost us much. We could sort of earn more out of these Olympics, but, we'll see. I'm sure that we'll talk about this quite a lot over the next decade, and we'll have time to analyse all aspects of this story. But just moving on. So, Fergus, you recently actually wrote a piece, Core Logic, sort of quantified the data from the past financial year, saying that house price growth actually hit 13.5% in that sort of financial year 2020, 2021. Tell me a little bit more about what they found and what, which cities sort of stood out. Was it sort of Sydney and Melbourne, or did anyone else take the lead?
Yeah, well, I mean, the story there is much as you expect, is that housing prices in Australia continue to rise. They noted that it's the highest annual rate of growth seen across the Australian residential property market since April 2004, which is sort of the tail end of the early 2000s boom. And basically, the big data release there is that they have the June data to sort of flesh out that full year recount of the growth, whereas previously it was a lot of forecasting and stuff like that. As you might expect, Sydney and Melbourne recorded the sort of strongest growth both in June and sort of across the year. But what you might not expect is that Darwin actually maintained the highest annual rate of growth among capital cities, with prices soaring about 21% over the last 12 months. Obviously, those base numbers are a bit lower than Sydney and Melbourne, but it's still very impressive. Hobart followed in second place with 19.6% annual price growth, which is pretty impressive. Yeah.
That is pretty impressive. Yeah, pretty impressive sort of house growth across Australia. Fergus, are you thinking about getting into the property market?
I mean, you know me. I'm always looking at interesting alternative ways into the property market. But right now, the tall order of deposit does escape me. And it's a question of what I can do in the meantime, I guess.
Yeah, exactly. And I guess being journos, we didn't actually do ourselves much of a favour in terms of raising that deposit, did we?
No. I mean, I was warned. People told me. Multiple people
warned me
told
too.
Me.
But yeah.
And I was like, no, I'll be different.
I'm going to make millions out of journalism. Cameron, what are your thoughts?
It's a long way away, put it that way. It's a long way to get a deposit in Sydney, especially. So I guess I think rent investing is much more of an option than buying in Sydney as it currently stands. In saying there's always hope.
There's always hope, I guess, yeah. Well, thank you guys for joining me on today's podcast.
No worries,
appreciate it.
And I hope you guys enjoyed this, a bit of a light overview of the news on smart property investment. If you have any questions for me or anyone on my team or Phil Tarrant, please write to us at editor@smartpropertyinvestment.com.au. If you're in Sydney, take care of yourself. Hopefully this lockdown will end sooner than expected, and we'll catch you next time. Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.